afternoon, everyone, and welcome to this afternoon strategic dialogue entitled Designing More Sustainable Development Finance Approaches. My name is Porter Delaney. I'll be serving as your moderator today. In this hour-long session, we've convened leaders and strategists at the forefront of shaping the global development financing field, and we're going to have a discussion on new financing tools and opportunities that better support sustainable impact at scale. And so, everyone, welcome to this afternoon strategic dialogue. Sorry, I had a little feedback there. And so I'm going to kick things off just by providing a short scene setter of what we're seeing by way of some trend lines in development finance. And we're going to talk about finance tools and initiatives and partnerships, both at the global level and also within the U.S., and touch on a few different topics, but really looking at innovation and looking at the organizations that are represented here today, how they have developed partnered and blended finance structures to advance sustainable development and to do that at an impactful scale. And so firstly, before I turn to our session participants, let me just run through, I think, a few helpful stat lines that will provide some context of what we're facing within the US and globally in terms of the impacts of COVID-19 and how it has depressed financing. It's created this need for new partnerships and new tools that can marshal resources. So firstly, I would just note that, and these are statistics, by the way, that you can find in a report that is listed on the discussion chat, whereby the OECD and the World Bank have put out these numbers over the last couple of months. But firstly, the OECD had noted that we'll see developing economies drop by the financing flows, I should say, to developing economies drop by $700 billion in 2020 compared to 2019 levels. And that is vastly exceeding the impact we saw of the 2008 global financial crisis by a factor of 60% more in terms of the decrease in financial flows. This is on top of a gap that our audience and our participants would be familiar with, a $2.5 trillion annual gap we already had in terms of financing the sustainable development goals. And some of those flows are domestic. So the domestic resources from government's taxation, those are expected, according to the World Bank, to be down 12 to 16% this year, as the largest source of finance towards development activities. But then with regard to external financing, the expectations of both the World Bank and OECD is a decrease of somewhere in foreign direct investment of 30 to 35% into developing economies. So quite significant levels of decrease. And then the last financing element that I wanted to address is with regard to remittances, which also are a really substantial tool in terms of financing sustainable development. And the expectations there that we'll probably see approximately 20% reduction in remittances in developing countries in 2020 as compared to 2019. So I don't mean to paint too gloomy of a picture. It's only to make the point that there are some real challenges that we face as we're looking for innovative ways to carry forward blended finance mechanisms. And the exciting news is that there are so many new initiatives and collaborations that are underway. And we've got an expert group of session participants today who are going to walk us through some of the new activities their organizations are undertaking. I want to note at the outset, as I turn to our session participants, that the Rockefeller Foundation partnered with Concordia to help support today's event. And so it's appropriate that I turn first to Maria from Rockefeller, who serves as their general counsel. And Maria, welcome. Thanks for joining us. And I thought I might first ask you to speak, if you could, about an announcement that Rockefeller has made this week during the UN General Assembly of a new catalytic capital initiative. Maybe you could speak to that and just the general approach that the Rockefeller Foundation has applied to trying to be a leader in the response to COVID-19 by way of finance. So with that, I'll turn it over to you, Maria.
Great. Thank you so much, Porter. And I am so excited that we get to announce this launch today. It's a work that has been very near and dear to me, having been in the impact investing space now for approximately 20 years, representing foundations, and now with the Rockefeller Foundation. And the reason I say that is because what this is allowing us to do, which I think is quite unusual, is to almost be an investment manager, if you will, for like-minded investors, whether they are other private foundations, whether they are the government, whether they are impact investors or corporations, for our initiatives and any new initiative that we might have. And we were already thinking of doing this prior to COVID. We do it both on the grant side as well as the investment side. And we started with the Zero Gap Fund, where we actually partnered with the MacArthur Foundation to try and fill that gap of the sustainable development goals. And so that was specifically targeted to the sustainable development goals, and we are actually managing that fund. And then on the grant side, we have Co-Impact, which is a vehicle that came out of the Giving Pledge and the originator of the Giving Pledge, who now is the CEO of Co-Impact, and doing a similar thing on the grant side, and basically being like an investment manager for grants in terms of projects that we believe are sustainable and scalable. And so that's the idea at the end of the day, right? It's bringing innovation and partnerships to aggregate capital, which we know that we can't on our own, make the kind of dent that we'd like to. And so this allows us to actually attract, whether it's grant capital, whether it's investment capital, to the kinds of projects that, whether it's technical assistance, whether it's resources that are not even monetary, and we can just partner on some of these projects. That's the goal. And now that COVID has come and the inequalities that has uncovered and exacerbated, we are actually using it to also work with other private foundations who are looking to help states actually with their testing plans and strategies to do things like do advanced purchases of testing kits and like in order to help states actually be able to coordinate these activities.
Thanks, Maria. Very exciting new initiative, and thanks to you and the Rockefeller Foundation. I've been on some calls with members of Congress and Dr. Rasha over the last couple of months on the testing and some of the areas where Rockefeller has been leading, and I know it made a $100 million commitment several months back in terms of COVID response activities. So for our audience, I also wanted just to flag that in the chat session, we're going to be uploading some links and documents to some of these initiatives that we're talking about during the session today. I'm going to turn to each of our other session participants now just to provide some introductory remarks on their organization and the approach that they take to innovative and blended finance. And then we'll come back for a second round to talk particularly about how they've adapted to COVID and whether there are new partnerships, new structures, and initiatives that they put together. So I'm firstly going to turn to Alix Zwane, who's the CEO of the Global Innovation Fund. And I won't steal your thunder, Alix. I'll let you tell the audience or those who aren't familiar with GIF about what GIF is, how it was formed, and the particular approach that you take to meeting financing needs that traditional donors and commercial finance have not been able to address. So with that, Alix, I'll turn the stage to you.
Well, thanks very much, Porter. And, in the spirit of the dinner party conversation I think we're supposed to have, thanks for hosting us, Rockefeller Foundation, and virtual gift of wine and flowers for you. And wonderful to be here with everyone and part of this conversation today. The Global Innovation Fund actually bears some resemblance to the catalytic capital initiative that you've just described, Maria. We're a multilateral investment vehicle that was established to invest in innovations that address global development challenges in developing countries. We partner with the bilateral aid agencies of governments. At this point, we're at 5 or 6 to mobilize aid budgets towards high impact innovations. And we have the flexibility to do both grant making and debt and equity investing in the pursuit of development impact. We're very much a social return first investor, which way we can get into more as we have our conversation later about how we can really flex our muscles of blended finance as we think about building back in pandemic recovery. We very much see our role at GIF as being part of using our patient capital that's relatively risk tolerant to either take the riskiest piece of a tranche of a project that has high impact, but where we need to crowd in capital given the stage that the innovator's at, or to very much ourselves address the pioneer impact faced by entrepreneurs who are building the markets that they're selling into, and so have longer time scale and time horizons than traditional closed-end funds can often tolerate. At the start of 2020, we thought at GIF that with the about $93 million we've deployed so far, that we were on track to improve the lives and livelihoods of some 90 million people. As we get into our conversation here today, I'd love to talk more about what it actually means to protect that asset as we all think about both the period of the crisis we're in now and then what comes next. So thank you again.
Thanks so much, Alix. And next, I'm going to turn to Kwasi Donkor, who's the Chief Strategy Officer for the U.S. African Development Foundation. Kwasi, I've spent most of my career working with U.S. government, foreign assistance agencies, other donor organizations, so I'm familiar, certainly, with the great work that the African Development Foundation does. But as sort of a smaller player within the U.S. government, at least by virtue of its budget, but playing a critical role in sort of the types of investments and the community that you're supporting. It'd be great for our audience, maybe if you could just give a little bit of an overview about the African Development Foundation and the approach that you take to sustainable finance.
Absolutely. Thank you very much, Porter, and it's a pleasure to be with you all here, and thank you to Concordia and to Rockefeller for hosting us. So USADF is an independent U.S. government agency established by Congress to invest in African grassroots organizations, entrepreneurs, and SMEs. Our funding comes from the U.S. Congress, and we make investments on its behalf, but our operating status is that of a foundation because we have gift authority. So we're a direct investor and grant maker to 100% owned African entities, and our operating model is based on providing two things: locally led solutions and community-driven co-created models, while providing capital to invest and link that capital to local project management support and business advisory services. So about 50 to 60% of our funding goes to ag and an ag climate change mix, and the rest of it goes to ag supply chain linkages to upgrade energy work and our social entrepreneurship portfolio. So it's very much a private foundation with local on-the-ground capacity building across a footprint of 20 plus African countries. And we do things development differently by utilizing a community-led development approach and a Pan-African network of these local implementing partners. And we leverage three core tools, our technical assistance, our capital, and our convening power to drive maximum impact. And as Chief Strategy Officer, one of the mandates I have, and I only joined ADF about 6 months ago, but it's to help rethink the value proposition of our capital and to use our grant capital in new ways. And this approach is really anchored in resource sustainability and is driven by a need to start looking at for ways to recover capital that beneficiaries and grantees may use to support the acquisition of productive assets. So there is there a world in which we deploy on average $30 to $40 million each year, and some of it comes back? And these are some of the questions that I'm asking. So for some grantees, the revenue growth accruing from these productive assets obtained using grant capital may in the final analysis demonstrate an ability to pay back grants that are provided at zero interest or low interest. And USADF has historically relied on grants as the main tool in providing support to these entrepreneurs and SMEs. But moving forward, we want to implement some of these innovative financing methods. And the demonstration proof point is our work in blended finance. And in many cases, like Alix said, the only way for a transaction to be commercially viable or for a project to be bankable or rather is for us to absorb some of that underlying transactional risk that a traditional private investor will not be comfortable with. And that is a demonstration proof point is our work with Allon in Nigeria. Allon is an impact investor and is USAID's funding partner in the upgrade energy space. And our grant capital is taken on that first loss layer and is structured alongside senior convertible debt from Allon. And so in many cases, since our partnership began, one can make the case that grantees may not have qualified for this funding, but for USAID's ability to absorb some of that risk. So I've said a lot. Let me stop there, and then we'll continue the conversation. impact it more.
Thanks, Kwasi. That's a great introduction to USADF, so thank you for that. I'm going to shift our geographic focus from Africa to Asia and bring in Naina Batra, who's the CEO of the Asian Venture Philanthropy Network. So, and maybe you can, similar to the others, just tell us a bit about the structure and sort of the mission of the organization. I read how your network now includes over 600 member organizations, and the ecosystem of social investors that you maintain is pretty diverse, it looks like, from philanthropists to impact investors, corporate CSR professionals. So please share more with us and the audience about the work that you're leading.
Thank you, Porter, and thank you, Concordia and Rockefeller, for hosting us. It's actually great to be here and represent Asia because, firstly, it's very early in the morning for us here in Asia. It's a little past 4 in the morning, so it's I'll have an early breakfast with you guys. But AVPN, thank you, Porter, for that introduction, is the largest social investment network in Asia. And why I think it's different is it brings across different players across what we like to call the continuum of capital. And I'm happy to see that Rockefeller, GIN, the Global Innovation Fund are all part of the AVPN network. And this continuum of capital is really important, especially because if we are looking to create enduring change, if you're looking, as you talked about, meeting the gap that is required to meet the SDGs, we need to go beyond our usual suspects, and we need to engage with unusual allies. It calls for bringing together regulators, it calls for bringing together markets, donors, all of them to be far more open-minded and flexible in response to changing circumstances like the pandemic crisis that we're facing today. So AVPN acts as a platform that actually brings together these different players across the full continuum of capital, from grant, debt, and equity, working alongside human and intellectual capital to look at how do we maximize impact, how do we drive more capital towards impact. And the network actually helps these different partners find other collaborations, find other co-investors, and how can they actually leverage the capital that they're putting into the system, and also leverage the impact opportunities in order to scale their impact. Just to give the people who are listening in an idea of the size of the network. Well, last year, before the pandemic hit us, our members deployed more than $10 billion US towards impact in Asia. So that's not small, but still that's not enough. And for us, what's really important is how do we actually break these traditional silos across philanthropy, impact investing, sustainable finance, to actually bring these different groups together, especially in the context of blended finance, especially in the context of innovative social finance, in order to provide the flexibility that each group brings, and therefore help us to create the best kind of most innovative financing mechanisms for impact. We're also finding that, post the COVID crisis, some of these innovative instruments are sort of gathering steam across Asia. And I'll be happy to talk a little bit more as we go on in the discussion on specific examples.
Great. Thanks so much, Naina. Next, I'm going to turn to Sean Gilbert, who's the Director of Membership for the Global Impact Investing Network. And Sean, actually, the last couple of years, and partnered sometimes with Alix from Global Innovation Fund and Concordia and Milken and others, we posted some discussions around future trends in impact investing. And Jen is always the expert to go to in terms of the leadership work of your organization and your membership. But we want to assume that all of our audience knows who you guys are. So perhaps you could provide a bit of an overview of the structure of the organization and its mission. So I'll turn it to you now, Sean.
Okay, thank you very much. And thank you as well to Concordia and Rockefeller for the opportunity to join the panel today. And actually, I think much of the orientation that the GIN has is actually quite similar to AVPN. It's no coincidence that at least 3 of the other organizations in this panel are ones that we work with on a regular basis. The GIN's a nonprofit organization that was set up and with the specific purpose of supporting the growth and effectiveness of impact investing. And what we mean by impact investing is investments that are made with the intention to achieve a positive social and environmental outcome. And I think most sustainable investing has an intention behind it. There's a conscious choice in it. I think with impact investing, what we're particularly trying to elevate is the idea that the intention is expressed through the investment, through the structure of the investment, through the strategy of the investment, and that it's part of the guiding thinking behind what motivates it. And specifically, that's something you also are trying to follow up on and track progress on, and you're trying to manage the impact and try to come out with a positive outcome. The GIN is in terms of what we do, we're a membership organization, in many ways like an industry platform. We have a community of practice, which is about 350 organizations from 40 or 50 countries around the world. They come from a sort of wide cross-section of the ecosystem, of the financing ecosystem. We've got another part where we develop impact measurement and management tools. The IRIS system, or the IRIS Plus system, which has been under development for about 10 years and is not quite widely used within the industry, is the focus of that. And then lastly, we also do research work, which both looks at trends in how the market's developing, but also looks at kind of applied questions. Because when the GIN was first created, it was very much 10 years ago, it was financial professionals looking how to bring together their investing and their impact. And they had two basic questions. How do I measure my impact? And then how do I structure transactions that will be able to capture that and bake it into what we're doing? And that's what you see in sort of the genesis for how we're set up. In terms of what we do around blended finance, many of our members are involved in blended finance, the development finance institutions, foundations, family offices. As an organization, our job is very much to be able to support the learning and exchange amongst them, to try to figure out how you can bring together the different types of capital within the ecosystem to make investments possible. And particularly ones that are going to deliver the positive impacts. We do that through surveys, research, dialogues, but also we have a part of our work that focuses specifically on members sharing experiences on how they go about designing products. And I'm happy to share more of that as we kind of move into the conversation today.
Thanks so much, John. And then I'm going to turn to our last session participant, Zach Knight. So Zach serves as the CEO and co-founder of Blue Forest. And Zach, I was interested in reading about your organization. It seems like you have a diverse mix of professionals, from scientists and engineers to finance and bankers, like your past experience before this venture. Climate finance and environmental sustainability really is going to be a focus in the rest of our conversation. So I'm delighted to turn to you now. You can tell us a bit more about how Blue Forest is melding together these different professional competencies and how you guys are leveraging finance to advance your mission around land management and environmental sustainability.
Absolutely. And thank you so much. It's such an honor to be on this panel with all of you, all your well-established organizations. And we are in our early stages, so I'm excited to share quite a bit more. And a big thank you to Concordia for putting this together, and Rockefeller as our first funder, first investor, and obviously for all their support to get us to where we are today. So my name again is Zach Knight. I'm the co-founder and CEO of Blue Forest Conservation. We are a nonprofit development firm. You might call us an intermediary. And the problem that we're focused on solving right now is wildfire across the Western US. I mentioned at the top of the call that it's been hard to breathe out here for the last month because of the record-breaking wildfire season, unfortunately, that we're seeing across the Western US. And unfortunately, this is also a problem that we understand how to solve. We just don't have enough public or philanthropic dollars to match the size of this threat and what we're seeing in California this year, and frankly, what we've seen over the last 5 to 10 years. So what we've done at Blue Forest is actually partner with the US Forest Service and the World Resources Institute to create the Forest Resilience Bond. And this is a public-private partnership that allows private capital from concessional sources like foundation, but also market rate investors like pension plans, insurance companies, endowments, to cover the upfront costs with doing much needed ecological restoration work in our national forests. And this is done to reduce the risk of catastrophic wildfire, but it creates a tremendous amount of co-benefits, protecting source water, avoiding carbon emissions, creating sustainable rural jobs. So we allow all the beneficiaries, which includes the Forest Service, but also state agencies, water and electric utilities, flood control districts, private companies, to sign contracts or agreements that represent the benefit they actually receive from these projects. And when you put all that together, that is what ultimately repays investors. And we've had a really interesting role. We actually started as a for-profit, and we've since transitioned to become a nonprofit. I think we were the first investment from that Rockefeller and MacArthur fund that was mentioned on on the front end of this. And my bigger job was not structuring the investment. It was convincing government at the state and federal level that finance actually had a role to play in solving this problem, in creating the governance such that investors didn't have any say as to where these projects were happening or what the prescription of the treatment was on the ground or who's hired to do the work. So really digging into some of those concerns so that we can bring finance and show that public-private partnerships do have a role to play in some of this work. And I think as we've transitioned to be a nonprofit, there's a lot more comfort in saying that, hey, we speak for all of the stakeholders here. My goal is not to maximize returns. It's to maximize the amount of projects and the impact and the benefit that can be created through this. So we're grateful for all the support, as I mentioned, the Rockefeller Foundation, also the Gordon and Betty Moore Foundation, but just as much the federal government from the Department of Agriculture in the EPA. So I'll leave it there. Thanks so much, and pleasure to be with you all.
Thank you, Zach. Really appreciate it. We've got some questions coming in from the audience, and let me just note, please do add your comments and questions in the chat, and we'll try to address them as we go forward here. I now want to turn specifically to COVID-19 and how it's impacted your organizations, and also how you've adapted and tried to either adjust your financing tools or develop new ones that can help in the response. Alix, maybe I'll turn to you first. You sort of made allusion to some goals that GIF had in terms of people reached before COVID-19. So one is curious, when I was going through some of those effects on development finance globally, and we've seen some unfortunate backsliding on progress against the SDGs and the Gates Goalkeepers report and other reports this week. One, just how has COVID-19 impacted GIF and its mission and its sort of ambitions? And then two, how is the organization adapting? How are you protecting your investees who are under stress? How are you looking to develop new investments that can be a part of the response? So I'll turn to you.
That's great. Thanks very much, Porter. So yes, as the scale of the crisis was really unfolding at GIF, we gave ourselves three big priorities this year. The first is to protect our portfolio. If we thought that we were on track for improving the lives of 90 million people, that's our most important asset, and we need to protect that. One of the key things here that we all have to think about when we're doing this is we want to provide bridge financing in some instances, as firms that were planning future raises in 2021 now see financing dried up. Some of the data you alluded to, of course, is going to ripple through domestic credit markets as well. And we're considering those requests and anticipate further such requests. The key as an investor, though, is to thinking through these, when we think through these in potential bridge financing opportunities, is to distinguish between solvency and liquidity challenges. This crisis is not going to generate a creative destruction. That's a natural part of well-functioning markets. Most of its effects will be indiscriminate and should be mitigated accordingly. And indeed, that's a key argument for public and government resources being deployed to support firms. However, there are some cases in which the pandemic will expose structural weaknesses in teams or business models. So the challenge that we all have then is to distinguish those phenomena. A second priority is to respond to the pandemic by making new investments that support response and recovery. One of the things we do at GIF when we're thinking about funding innovation is we look for market failures. We look for places where, and as our colleague who comes from the climate finance world just talked about, places where co-benefits are disproportionately large. And co-benefits may be health benefits that investors don't price very accurately, or they could simply be the benefits that come from the discovery process of R&D and innovation itself. Given how little we know about the pandemic and how little we know about how health and economics are intertwined here, innovation's never been more important, and it's never been harder for the market to price it appropriately. So at GIF, given our mandate, we really have tried to take this on and recognize that time is of the essence. So we're not building bespoke epidemiological models for each investment that we make. We're trying to strike the right balance between practicality and pragmatism while still having a real lesson learning agenda so that all of us can learn more and think fast about how we can be more responsive and have limited dollars go further. So we've invested in, for example, helping one of the companies in our portfolio, called Clinica, who in normal times basically runs LinkedIn for pharmacists across Southeast Asia, in real time, increasing their service offering to pharmacists so that they have better information about COVID, they have better information about access to protective gear, and they can expand their offering to their clients about how to avoid fake news, hysteria, and also stigma associated with COVID. So that's just an interesting example of quickly blending some capital for an existing partner so that we can amplify our own contribution to the pandemic response.
Thanks so much, Alix. Kwasi, I want to turn to you next. I've watched a number of our partners in the U.S. government have to adapt in terms of how they operate and how they deploy resources. From a foreign assistance standpoint, I'd be very curious, the overview you provided about how the U.S. Africa Development Foundation is structured and its area of focus. How has that been impacted? Are the grants that you're providing going to types of organizations? Is the volume different, the geography different? I mean, how have you responded and adapted to COVID-19 in terms of the portfolio of assistance that the U.S. Africa Development Foundation provides?
Thank you for that, Porter. So ADF works across three core areas. So ag, social entrepreneurship, and off-grid, like I said before. And we bring three tools to bear: our technical assistance, our capital, and sort of our convening power. About 70% of it goes to the ag space, and we support these grantees to help build them up around governance, the use of ICT tools, and helping them access the markets, And so really that's where this really hit us, right? So, and we work in the ag space in a few different ways. So we can work directly with the producer group, which is essentially smaller farmers aggregated into co-ops, or in fewer cases, we work with intermediaries. In our world, these are aggregators, agro-processors focused on agribusiness. So today we really work very well with these co-ops, but the success of that work is dependent on them having intermediaries to hand off their produce, unless it's a finished good, which can then directly go to market. If it's not a finished good, the produce that they're growing directly has to go to someone who will turn into a finished good. So in essence, part of the success of our work in the ag space depends on us directly working with both these groups, the processors and the co-ops. 2020 comes in, COVID happened, and the bottom fell out from underneath everybody. Right. And so we needed to do a couple of things. First, we needed to respond to support our own direct grantees, but we had a process to do that, not as effectively as we did with the intermediaries, with the agro process, which I can come to that in a minute. So we instituted something called the CARES program. And this is just around the time I was joining USAID. This is around April, May, thereabouts. And essentially it was something called the Capital for African Resilience Building and Enterprise Support Initiative. And essentially what it was to go in and for our grantees that were imminently facing negative impacts from on the projects and that they were worked on due to the coronavirus, we needed to find a way to shore them up, because a lot of the work that we had done was essentially getting pulled back. So we provided them approximately $3 to $4 million in immediate relief and response capital to help our grantees address pressing COVID-19 related business concerns. And then what we also did is that we helped them repurpose and reconfigure existing grants so that grantee organizations could withstand and adapt and be more resilient to COVID. So that was what we did with our direct grantees. And then earlier today, in fact, I was on a call officially launching what we call the Coalition of Farmer-Allied Intermediaries. And this was an attempt to resolve the other part of it, which is the intermediary. So this is a coalition that was brought together by folks at Bain, the Global Strategy Consulting Company, which brought together USAID alongside a group of leading social pioneers. So TechnoServe, Partners in Food Solutions, their Root Capital, Lando Lakes, because of this sort of shared commitment to the track record of supporting farmer-allied intermediaries. And the mission is multifold, right? But a couple really stand out, given this global pandemic. it is to equip these intermediaries with the required capital and strategic and financial and operational capabilities to ensure business continuity and adaptation to survive COVID. And more importantly, using our knowledge of these businesses. And I talked about grant recovery initially, but the idea that around what we can do around grant recovery and sub-debt repayment to establish credit worthiness, to catalyze more local lending, for and investing in some of these food businesses. So today, the resiliency grant pilot, funded by both USAID and Cargill is underway and has already provided $500,000 to 10 intermediaries across Kenya and Ghana facing these business continuity challenges, and to essentially support these intermediaries around everything from safe operations to workforce maintenance, smallholder farmer investments, and product and distribution adaptations because of COVID. And this is an example of how we are working in these sort of unprecedented times, both for our direct grantees, but also looking at the at our intermediaries, which is core to the work that we do in the ag space.
Thanks, Kwasi. Yeah, and cheers to USAID. That sounds very forward-leaning in terms of the adaptiveness that you guys have demonstrated and deployed. I remind our speakers that if you guys unmute, I'll know to turn to you. And Sean, I see you were unmuted, so maybe I'll turn to you next and see if you wanted to jump into this conversation around sort of the COVID-19 impacts and new strategies that are being deployed.
Yeah, no, I'm happy to do so. And we're obviously quite different from the previous two speakers as an organization. And I think for us as an organization, there's the experience we ran into as an organization, and there was what we were seeing and hearing and trying to support members with. I think like everybody else, the whole COVID wave came as quite a surprise and required a quick change in mindset. And the first thing obviously for us was that we had a lot of difficulty in figuring out how to bring people together and had to find ways to be able to support connectivity amongst investors as they were all suddenly struggling with a very uncertain financial landscape. And so a lot of our first efforts were focused around trying to just simply create opportunities for investors to come together and learn from each other, because they could all see that the assumptions that they had for the entire year were completely out the window. And we were quite often hearing comments from people saying that they didn't feel confident projecting past the next week. But pretty quickly, what we ended up settling into is something which was a launch called the R3 Coalition, Response Recovery Resilience Coalition, which AVPN and Rockefeller were part of. And that was really set up because what investors are seeing, at least impact investors were coming to us with, saying, there's more need out there than I can respond to individually. And I'd like to find ways to share examples of where people are coming to me in terms of needs that they have that I can't particularly service, but maybe somebody else can, or I can do part of it, but I need a partner. And so the R3 Coalition focused on pulling together a number of partner networks to be able to share information. And then very specifically, it was also putting together investors to be able to share information about opportunities they were seeing and the needs that they were seeing, and in particular examples of investments that they were thinking about so that they could start finding ways to partner. We also put together a series of research briefs that coming out of that. I'd say what we were seeing very much mirrored the trajectory that was just described. I think the first thing it was exposing was the limited cash reserves that a lot of social enterprises were operating with in developing and developed countries. There was a very quick pullback that we were seeing and hearing about from DFIs, from funds that were trying to operate in emerging markets, about how as people suddenly became uncertain about what to expect, the first thing they wanted to do was retreat back to more liquid markets and retreat back to things that felt more familiar. So there was an immediate cash crunch that people were experiencing. And then second, as COVID was changing what was possible, even you think about some restaurants and or more important businesses which are you're dependent on being able to go places and see people and exchange things directly, the ability to execute on businesses and business models is under pressure. And the general trajectory we're seeing was investors trying to first respond with ways to come up with offering additional liquidity. So we were seeing examples of debt funds that were being raised in very short order. We were seeing a number of coalitions that would come together around themes like energy access, with people trying to figure out how they could share intelligence and pool capital to be able to support and shore up the businesses that they've been working with. Then we saw them shifting to a phase of trying to figure out how to adjust the terms of conditions once they felt that they were getting it, working, their investee companies were getting into a slightly more stable place in terms of liquidity, and then looking farther ahead to try to figure out what do businesses need to do to adapt to what's likely to be the reality that they'll have to operate in? How do they have to change some of their operating assumptions going forward over the next year or two? And we see people in very different places along that type of a trajectory. I think one of the other things, and last thing I would just mention, one of the other challenges that surfaced was it was the action plan of how do I respond to the investees I'm working with today was relatively straightforward, in the sense that you have relationships, you have an existing structure to work with them on. What was quite challenging was people starting to think about, well, I see a lot of needs surfacing. How do I make new investments? How am I going to go about doing due diligence? How do I start even just gathering basic information so that even once we stabilize a little bit what we already have invested into, how do we begin to respond to all the new needs that are coming out in a world where the typical tools that we have for predicting the future and the typical basic processes that we have as an investor are not as easily available to us, or might not be available at all. And that's still very much a work in progress from what we see from people.
Thanks, Sean. Maria, maybe I could turn back to you. You were only able to cover a bit of what Rockefeller Foundation is doing with regard to COVID-19 response and various initiatives at the outset, the introductory remarks. So would love to hear a bit more, and just to get you to jump into the discussion, maybe respond to some of your co-participants as well.
Sure, and it's great to hear from some of our funded projects or launched projects that we actually helped launch or that are partnering with. I would say that the way that COVID has impacted the foundation is so varied and in a lot of different ways. We have primarily 4 initiatives in terms of health, food, power, and equal opportunity that pretty much had been working in a more siloed way, trying to achieve their own particular individual goals. And the pandemic has caused us to really shift and pivot to the particular needs of the moment. And so it's this viewing it from the perspective of what is the challenge right now that this moment is presenting. And kind of going back to our roots, I would say, because our specific focus area in the very beginning was health and science and data-driven solutions and innovations, having helped launch the predecessor of the WHO, and just using that legacy, that history, and our assets, which, like Kwasi said, is grants, convening power, and investment capital, to think of ways that we could meet that moment. Our particular challenge was on testing and recognizing that testing and contact tracing was really one of the ways that we could, get above water from this pandemic, and realizing that there wasn't a national response to this. We convened a number of scientists and academics and practitioners and pharmaceuticals and the like, in order to come up with a national testing and tracing strategy, which was then taken up to some extent by HHS, and we've been in discussions with them and with states and local municipalities on what are the different ways in which they could achieve better testing, expand their testing, and particularly focus on low-income communities, which were being affected disproportionately. And so this is pretty iterative, right? Because it's like, as you're meeting the moment you do that national testing plan, then the situation changes and you need to focus on certain aspects of this. So we have committed $100 million to the pandemic response. And there are various things that we're looking at, from the immediate to the long term, like establishing a pandemic institute in the long term, who would be kind of the central repository for being able to detect and respond to this kind of situation in the future. But also the immediate needs from liquidity facilities for some of our power generating and power developers that we've been working with on the power side, to make sure that they just have the liquidity to keep being able to service their customers. Two, also looking at potential testing and rapid testing solutions that we could potentially make investments in. So it's varied. It's kind of a moonshot moment for us, we believe, both on the health side and what we're doing with states in order to be able to aggregate their resources and be able to do advanced purchases with manufacturers, so that the capacity is being developed and it's available for the states. And with a centralized purchasing facility, we could actually hopefully get better pricing and reliable sourcing of these products. So it's kind of being creative in all kinds of ways to make sure that we're able to meet the moment.
Thanks so much, Maria. I have been getting some questions from the audience. So Zach, I'm going to turn to you because we had a question that was sort of a more general question around the group's view of identifying some of the biggest gaps in financing. And I recalled both from your opening remarks, but also reading up a little bit about Blue Forest, the interesting story of how some UC Berkeley business school students were addressing the forest restoration challenges in California nationally and looking at finance gaps, and that led to a whole process of you guys securing financing and competitions and getting grant funding and then developing innovative finance tools. But now, as you look with this organization that's put up, it's your work and beyond. What are some of the biggest finance gaps you see in sort of your sector with regard to whether it's forest restoration specifically or these broader land management, environmental sustainability issues? What are the financial tools that aren't being deployed, and how are you guys trying to address that?
Yeah, I think it's a great question. I think when you ask people, if you went around this panel and said, how big of a problem is wildfire, you'd probably hear numbers that are in the hundreds of millions or low billions. But if you look at it from a government spending perspective, the Forest Service itself, which is a big part of our public lands, but certainly not all of it, needs in excess of $100 billion to solve this problem. And for an agency that gets appropriated about $5 billion a year and half of that goes to firefighting, you can quickly see that the public resources for what we want to do don't exist at that scale. And I think this kind of highlights the importance of why we need to acknowledge these ecosystem services and the positive co-benefits that a lot of these projects produce, because these are other groups that benefit economically if these projects happen. And in a lot of cases, if you leave it to the government with a limited budget, the project won't happen, or it won't happen at the scale that it could. So start to think about how can we bring in other stakeholders to match some of those government dollars and make longer term financeable commitments in the form of contracts or agreements. I think that's the most important piece of this. And as finance folks and as a reform Wall Street person myself, we also need to listen. I think that was one of our big things that we came into this. We didn't say, we're the finance people, this is how you have to do it. We said, what are the current regulatory authorities that allow you to do certain things at the state, federal, and local level? And they're going to be different, but we can build these financings around what government can do at the different levels. And it's actually not that challenging when everything is said and done. I think the other point to make here is that the vast majority of this landscape restoration, whether you're trying to reduce the risk of catastrophic wildfire or other environmental challenges, is that we find ourselves in historically low interest rate environment. And the vast majority of these works are going to be large scale fixed income financings where you get streams of payments from, again, these ecosystem services, public budgets. When the money becomes available, there's never going to be a better time to do this than now. And we've seen a tremendous amount of interest, not just in the restoration work, which is obviously a goal of government agencies at the federal, state, and local level, but then also groups like insurance companies that want to be investors in public-private partnerships like this, because it can serve their interests by reducing the risk of catastrophic wildfire and the claims that they'd have to pay out as P&C insurers. And I think what's unique here is the opportunity to say, hey, we're a nonprofit. We're not going to stand up an insurance company. Let's talk about what fire risk really means to you and your business model. See if we can price some of these things better, and see if there's, in addition to financial solutions, are there insurance-based solutions that could help solve some of this. So I think you take one financial engineer and you put one problem in front of them, and you bring in the other smart folks, the other engineers, to tell you how to do this. And frankly, the scientists that can measure and credibly verify what these outcomes are. I'd like to say that all of our financial innovation is about 100% based on scientific innovation and the understanding, again, of these ecosystem services, how to measure, how to tell the story with the stakeholders and really bring them into these projects. Because the more stakeholders, the easiest this will be.
Thanks so much, Zach. Naina, you got up really early this morning over in Asia to join us, so I've got to be sure to pull you back in here. I don't let you doze off because I know it's earlier than 5 a.m. over there. But with no specific topic in mind, just wanted to pull you back into the discussion, maybe to reflect on what you've heard from some of the other participants. Also, if you'd want to offer some more perspective about your organization's work at relating to COVID-19 responses, we've heard some of the others speak to. But I'll turn back to you now.
Thank you, Porter. No, I'm definitely wide awake listening to all of you. But no, I mean, building on what Sean said, and I think what Maria also added on, I think it's COVID-19 has probably been, something that nobody could really anticipate how hard it would hit and how long the sort of long tail of COVID would last. And, it's still lasting in some of the countries in Asia. And I think for us, what has been interesting is two things that we've seen. One is that it's led to a far higher degree of collaboration across different groups amongst our membership. So whether you look at grant funders coming together, whether you look at things like the R3 coalition that Sean referenced, whether we're looking at COVID action collaboratives that have been come together in countries like India, we're seeing a variety of stakeholders who've actually come together to try and see how they can pool funds to meet, firstly, the immediate humanitarian needs, but then secondly, go on to see, in terms of the recovery phase, especially for some countries in Southeast Asia, how do you actually start addressing the recovery phase for small and medium enterprises that are focused on impact? How do you actually sort of try and see how can you actually help some of your investments really weather the storm? Also sort of referencing on what Zach said, I think it's also interesting because we thought with the pandemic, some of the investments in other areas like climate change, which were gathering steam before that in Asia, would come to a halt because people were so focused on addressing the immediate humanitarian concerns that came out of COVID. But what was actually very interesting is one of our members, Circulate Capital, actually established one of, I think, which is probably the world's first investment fund, which was dedicated to preventing ocean plastic, and launched it around, just a few months ago. And that I think is really interesting because it looked at providing both debt and equity financing through the Circulate Capital Ocean Fund to circular economy startups and SMEs in Asia. And I think it's important because, as we see from the wildfire crisis in California, a lot of the climate-related crises are not going to go away. And COVID has only sort of highlighted how important it is that both social investors as well as, philanthropic funders actually look at, not sort of taking their eye off the ball on other pressing issues alongside sort of meeting what COVID has kind of sort of, thrown up as challenges across the spectrum. So I think from Asia, two things which I have taken away. One is, an increase in collaborative funding. And second is actually still the desire to have innovative financing solutions, whether they be in terms of, the an investment fund like what Circulate Capital has launched, or it be in terms of SIBs and DIBs that we see are growing in Japan, or the combination between an asset management company in Indonesia that has kind of brought a mix between religious capital, religious giving, and government support, partnering with UNDP to look at how can they actually help in the COVID crisis in Indonesia. So we're actually seeing a blend of innovation, increase in collaboration, and an appetite to fund other areas other than COVID.
Thanks so much, Naina. We've come to just our last 5 minutes. So I think what I'll do is just a quick across the board go around each of our session participants to offer some closing thoughts or anything else they wanted to get in earlier. I'll also just throw out there in case you want to comment on it. There was another question that we had from the audience, which was addressing how do we advance financial inclusion? How do we deploy finance to support migrant entrepreneurs and migrant workers? And an issue we've looked at in my organization a fair amount. I know forced migration is at the highest levels we've seen in 50 years. This is pre-COVID, just due to conflicts, climate impacts, a range of other factors. So the extent to which any of your organizations touch on financial inclusion as it relates to migration, that would be great. But don't feel like you need to. You also just want to get some final thoughts and remarks. So I'm going to go as my screen looks here across. And Kwasi, I'll start with you.
So yeah, thank you for that, Porter. I'm going to be very quick here, and perhaps the way that I will answer that question is just really go back to this COVID, final thoughts here. What COVID has done and sort of revealed how much we need to build resiliency into our grant portfolio, and for me, from where I sit, coming together as a group to think about money that's coming after us, sort of a framework around a graduation model. So there are really 3 questions that I'm asking, as we work with our grantees. Are we meeting our grantees where they are? Are we being intentional enough about right-sizing the toolkit so that, for example, we are differentiating the TA needs of grantees who are at different stages in their entrepreneurial journey? And are we making the right connections to ensure that grantees remain resilient and successful post our intervention, USAID's intervention? And so those are some of the things that I'm thinking about, and how can we come together as a group to make some of those kinds of decisions happen. Let me stop there. I know we only have about 3 minutes, so others can get in.
Sure, thank you. I would say that COVID, for as difficult a situation as it has presented, it also presents opportunities. And it presents opportunities for us to think about how do we build back better, which I know is a slogan of one of the campaigns. And how do we do the things that we do in a more equitable way? And how are we focusing this aggregation of capital? Because I actually I think this is an opportunity, because in the things that we have been doing, others are coming and saying, how can we participate in ways that are just amplified and much more than we have seen in the past, which is part of the reason why this new entity is going to be really helpful in that respect. And interestingly, right, from a health perspective, our health work had been focusing outside of the United States on precision public health and using data to help with maternal health and child mortality. And now it's, our backyard. We're having to look at our own backyard and seeing what the needs are and how we can use this as kind of a testing ground for how we might also do some of this same work outside of the United States. And then seeing the differences in how different countries and different governments are dealing with the issue. And sometimes realizing that we're actually having an easier time outside of the United States than inside the United States. So I think it's a moment to reflect and refocus. I know that Rockefeller has done this, and it's again a meeting of the moment time and a time of opportunity to actually do more and have greater impact.
Thanks, Maria. You have inspiring thoughts there and much appreciated. Sean, I'll turn to you next.
Yeah, well, thank you, Evan. It's been a fascinating conversation, and I think it's helped kind of it's surfaced the breadth of challenges that people have seen and encountered, but then also how rapid pivots and an ability to adapt and try to think creatively about the tools that organizations have available to them does make it possible to have at least some kind of a response and some contribution to it. And I think picking up on Naina's point, there's certainly places where we see some pullback in a sense, but I think if we look at the wider swath and the wider trend that's happening in this financial sector, I see more and more people that are asking the question of, what does my investment mean? Not just what's the return, but what does it mean? What purpose is my capital being put towards? And so I think it's easy to look at the tremendous needs that we have facing us around the Sustainable Development Goals and globally or locally. But I think the place to take some kind of inspiration is the fact that there is a huge stock of capital. And so our job is just to figure out how do we get capital to the right places at the right time.
Thanks, Sean. That's a great handoff to Alix with the Development Social Impact mission of GIF. So Alix, welcome. Some final thoughts from you.
Well, thanks. I think I can actually build on what all of our colleagues have been saying. We've got this enormous challenge ahead of us. 25 years of progress in lifting people out of poverty has been wiped out since the pandemic emerged. And we all know we can't take another 25 years to get back the gains we lost this year. Building on what we've just been talking about, I agree. The reset and recovery that needs to follow this pandemic presents us with opportunities to build fairer markets. I often think back to that Village Capital report that found that 90% of capital invested in startups in Africa in 2015 and 2016 went to businesses with one or more European or North American founders. Given the scale of the economic recovery ahead of us and how immense it is, for those of us who invest in developing countries, our success is going to depend on us doing things differently, partnering with local entrepreneurs and innovators so that they drive rebuilding and building of markets. This really is our opportunity to put this right. Again, I echo everybody else's thanks too for the session today.
Thanks so much, Alix. Zach, I'll turn back to you for some closing thoughts.
Feels odd to have the last word amongst all of these panelists here, but I'll just give my perspective from being this sort of grantee that's on the ground here. I'd say for all the financial entrepreneurs out there, blended finance has a huge role to play in getting whatever you're trying to do off the ground. It's one of the most important features, but remember to structure these investments as if it was all institutional capital coming to play. And if we do that right, even at a smaller scale, what you'll see is that institutional capital will start to come in and actually crowd out some of what you might see as concessional capital and needing that in the early days. And that's very much been our focus on talking about natural infrastructure and starting to get investors to look at what we're doing in our forests like we would other infrastructure project finance. And we need to go from innovative and new and exciting to boring, because when it's boring, that's when the money really starts to come. So if that's a good way to end us, I hope it is. And thank you all for the opportunity here today.
Yeah, and Naina, I think I hadn't reached you yet as well, so you'll get the second final word, and please right ahead.
No worries, I'll follow Zach, and I'll be really quick, because I think one thing it's shown us, this crisis, is that it's really important that investors practice both flexibility and agility in deploying their resources. If we are to really build back better, if we are to be more inclusive, I think it's important that all of us are flexible and agile as we pivot to meet the crisis.
I will tell you, having moderated some of these sessions at Concordia in person, where we all hope to be back together soon, that you would have, as a group, got a resounding and very loud applause for this wonderful session. I mean, just really insightful, thoughtful comments throughout. So I will, on behalf of the audience, thank our participants for taking the time to come together today to share these great perspectives. And as I referenced at the outset of this session, come back to the event page throughout the week as you're participating in Concordia. You'll see some of these initiatives and the fact sheets put there, and hopefully you can get in touch with these session participants and find more ways to collaborate. So with that, I'll thank our session participants again and wish you all a successful rest of your Concordia and UN General Assembly week. Take care.
Thank you, Porter.